Income tax 2020. Tax software example, dividend income. Come in, relax with income tax 2020. Here we are in our Lacerte tax software. You don't need the tax software in order to follow along. We're going to be populating the 1040. The tax software will help us to do that more quickly, entering the data input, testing out different scenarios, jumping back and forth from the data input over here to the tax return. So we're going to have our single filer again, Eric Smith. We're going to say that they have W-2 income to start off with of the $100,000, standard deduction of the $12,400, taxable income being the $87,600. If we go back on over to our tax formula worksheet, same thing, $100,000, standard deduction here, the $87,600. That's going to be our starting point. Now, as we go through this, note that we keep going back to the starting point to make this really a lot cleaner to go back to just basically W-2 income. Obviously, if we had all these things compiled on themselves, it gets more complex, right? So everything that we're looking at, fairly easy when we look at it kind of in isolation. But let's say you have 5 different 1099 dividends, and then 5 different 1099 interest, and then you got 3 different W-2 forms and married couples and whatnot. Then just simply organizing the amount of data and double checking to make sure that you got the data input can be a little bit more complex. Again, that's what the tax worksheet is going to be helpful to do. But we want to keep, peeling back the information, taking a look at them in isolation. Then we'll go back in and work some more comprehensive problems at a later or future point. So we're going to say, and imagine here, now we got the dividends. So dividend distribution, that's going to be in a 1099 div typically. You may get this from a broker, which might look slightly different, but the layout of the boxes and what the boxes then will do, meaning the instructions for each box will be the same. Those are standardized. So we're going to say here, let's pretend that in box 1, we had let's say 1,000 in box 1 and nothing in box 1A. Box 1A has 1,000, box 1B has nothing, and that's all we have. Let's test that out. If I go back on over, we're going to say, let's go to the income drop down. Let's go to the dividends. And this is going to be for, let's just call it bank 1, or it'd be the broker or something like that. And I'm going to say this, so it would be like a Vanguard or an E-Trade, or possibly your bank or something like that would have your investments. So I'm going to say total ordinary dividends. We're going to just say 1,000, and nothing was in the second box, so we're not going to say any of them are qualified. So we're just going to enter the 1,000 into the first half. Let's go on over to the forms then. And I'm going to remove this, and we're going to say, okay, there's the 1,000. It's on page 1 of the 1040, and it's entered on 3B. There's nothing over here in 3A for the qualified portion because none of it was qualified because we put nothing into the qualified portion. If I then select the worksheet, then we have the detail of that information. Notice what we do not have is Schedule B. Schedule B is not over here because we're not over the 1,500, which would constitute a whole nother schedule that would then be involved. If I put that same information into our worksheet over here, I'd say, okay, I'm going to add now dividends to the top line. I'm just going to say, and I would pull this from the 1099 and do it separately, and then double check that this number has now come out to be the correct number, 88,600. So 88,600, that looks good. Now let's take a look at the tax calculation. If I go then to the second page, the tax calculation is at the 15,350. So I'm going to say, all right, tax calculation, going back over. I'm going to plug that in here so we can see it. This is going to be the 15,350. 15,350. Did I get that right? Yes. Okay, so then I'm going to go back to page 1. Now let's imagine that in box 1A and 1B, we had 1,000 in both boxes. So that would mean that I'm going to go back over and say, okay, let's go back to my data input. I'd say 1,000 in ordinary dividends, and we've got 1,000 in the qualified. So that would be box 1A and box 1B down here. Let's see the impact there. If I go back to the forms then, now we see this amount in 3A. So we see this amount here in 1,000 for the qualified dividends, and in 3B we also see the 1,000 here, and once again we don't see the Schedule B because we're not over the 1,500. So no effect on the first page here. We're still at the 88.6. No effect over here. We're still at the 88.6. It's not like there was 2,000 of dividends. It's just we're saying that of the dividends, all of them were qualified. However, where will the impact be? It'll be in the fact that there's going to be a whole different progressive tax schedule that's going to be taxing the 1,000 dividends as opposed to the ordinary dividends. So the tax software is going to be breaking out in the tax calculation. So if I go then to page 2, the tax is now that 15,260. So if I go back over here, the tax is 15,250, was it? 15,250? 15,260. 15,260 for. So the difference then will be equal to $90. So we have a $90 difference even though the taxable income is the same. Now that's something that's a little bit difficult to see when using tax software because the tax software is going to be calculating the tax. So we got to this point, we can verify the taxable income. It's the same. And so in order to be able to understand and explain the difference and the effect of the qualified dividends versus the ordinary dividends, we got to realize that the tax software is basically breaking out the qualified dividends and taxing them at a different progressive tax rate, different progressive basically system. So one way to see that is I can say, well, what if I go to the tax software and I like remove them? What would be the tax if there was no 1,000 at all? If I removed the 1,000 and go back on over and say what the tax calculation we have then is at now the 15,110, the 15,110. Let's put that here, 15,110. The difference between that and what was calculated on the qualified dividends is 150. 150 is equal to the $1,000 times the 15%, 0.15. So that 150 is our difference because if we look over here, we see the rates. If it was single, over making income over 39,375 to 434,550, it's going to be 15%. So we have a 15% tax rate there. Now, if I was to go back to our software and take a look at what the rates are for the average and effective rates, if I go to the tax summary and we take a look at our marginal rate, the highest rate, it's at 24%. And then the effective rate, the average rate is at 17. So we're being taxed at something less than that, which would be the 15%. Okay, so let's continue on here. I'm gonna remove this, and then let's say we go back on over to the tax software, and let's imagine now that we have here in box 1 $1,000, and then in box 1B we have $900, right? So they're not the same number. Well, then we're going to say, okay, well then in box 1 we had $1,000, and then here we had 900. So now that basically means that of the dividends that we got, 900 of them were qualified, 100 of them were not. So we're going to say, all right, well, if I go to the forms then, and I go to page 1, we're going to say that we have the 1,000 total that's going to be included in the taxable income. 900 of it were qualified and therefore will be taxed at the other rate, which looks like 15%. And then the 100 of it are going to be included in the normal progressive tax structure and taxed in that format. So I'm going to basically say, all right, well then if I go back to my worksheet, I'm basically still putting in the same $1,000 here, because I'm not really, I could break out the qualified or not qualified in the worksheet. You might want to do that just so you can double check which are qualified or not. But for my worksheet, they're all going to basically tie in, and I'm double checking this number, the taxable income, and then I'm letting the software do the actual tax calculation. So in this case, we'd say, okay, well that means that we have the 1,000, we're still at the 88,600, page 2 tax calculation, now at the 15,269. So now we're at 15,269, right? 15,269. So again, the tax calculation is being impacted by, of course, whether it be qualified or not qualified. So now let's say we had 2 of these forms, and we have another one which has qualified, has dividends of another, let's say 2,000, and let's say 1,500 of them are qualified. So I'm going to say, let's do another one, and we're gonna say add one. And this is bank 2, and this is going to be, I'm going to say 2,000 and 1,500. So now we're over the threshold, so we should see Schedule B pop up now. So I'm going to go back over and say, okay, on first page, now we've got 3,000 here, 2,400 of them qualified between the two. We're over 1,500. Therefore, Schedule B has now popped up here. Schedule B, first half is interest, second half being the dividends. There's our two basically dividend items, 1,000 and 2,000 adding up to the 3,000. That amount then pulls over to the 1040 here on line 3B. So if I was to put that into my data sheet, I'd say, okay, worksheet, this is going to be another 2,000 that's going to be included in taxable income. Taxable income now we're at the 103 minus the 12,004 to get to the 90,006. I can verify that number here. So that looks correct. 90,006 tax then calculated on it at 15,614, which I'm just going to populate here. 16,514. 15,614. Sorry, I do that sometimes. 15,614. Okay, so that's going to be that one. Now, the other common item you might have on the dividends is you could have the total capital gains 2A might populate sometimes, and that's not going to be like a dividend, but it's something you kind of want to be aware of because when you enter it into the software, it'll be on the same form and then it'll pop up somewhere else. So let's just take a look at that. If we then said that we had something in line 2A, let's say, I'm going to go down here and say, okay, there's total capital gain distributions, and let's say we have 3.5 there. So that's in the total capital gain contribution. So then if I go back on up, it's not going to be in the dividend income, even though it's used that form in order to do it. Instead, it's included in capital gains. And this is often the case. You can think of it like if the company paid back something that would have been dividends, it was a payment, but it wasn't qualified as dividends, but rather a return of investment or something like that, then they might put it into capital gains, and then it'll be taxed as capital gains. So you'll see it on the dividend income. You'll input it when you input the dividend, the 1099 div into the system, but it will not have any effect on the dividends, but rather be in the capital gains, which may be included on Schedule D, and it'll be in capital gains, and it'll be taxed at different rates and whatnot too, and we'll talk about that more in a future presentation. But we just want to touch on it here because you might see that. So those are the major components that you'll have in here. Again, if you see any of these other data input fields, then you can look at the instructions for them, which you could find on the IRS website if you look up the form and then look at the IRS website, or oftentimes it'll have the instructions with the form when you're doing the data input. And then typically you can line up then the numbers to your data input fields. So the software like Lacert here has the nice data input fields that line up exactly, so the data input's fairly straightforward, and then you can use the software to just see what the impact is on the tax form. So you can say, okay, does that make sense to me if I go to the tax form? Does it populate where I believe it should populate? Why does it populate that way? And to do that, to go back and forth and understand why the software is populating in that way will help you understand it. It'll help you to answer questions if someone asks, if the client asks you questions about certain things, like what is an ordinary dividend and a qualified dividend? What's the impact on the tax return? Why does it matter? So you want to be able to respond to those, even if you're kind of relying on the software, of course, to do the actual tax calculation.